So this is an episode which probably is not scope of this channel, but I thought that the impact of this crisis, which is the liquidity crisis, because of rupees spiraling down against the dollar, which forced me to actually create this video. There's a lot of myths and misinformation I will try to debunk. So, so what has happened last 1 year? Uh, Based on the US dollar, our rupee value is actually spiraling down, right? It was spiraling down from 84 to now we reached a stage where it was 90 point something, right? It crossed 90. And when it crossed 90, obviously that's a significant marks. We lost almost 8% valuation, 7 to 8% valuation of currency valuation. And so that has actually sent alarm bells to not only to the policymakers, but also to the investors. When I say investors, both foreign and domestic investors, right? Now, now what has actually what is the impact of this was lot of FII, foreign institutional investors, were pulling their money from the market, stock market and the capital market, and there was a lot of foreign investors pulling their money from the bond market, right? Indian bond market. There was significant amount of liquidity risk or liquidity crunch we had because of this crisis, and also there are a lot of hedge funds. They're losing money because the 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 direction of the movement of forex the currency exchange was slightly further northwards, right? That was not being hedged or positioned. So there are many things I want to debunk. The first thing I want to debunk, which is a misconception, somebody influencer, like on finance influencer, I don't know their credibility or credential, how they kind of comment this kind of um, in the open media that 30 years back our currency exchange compared to dollar was 45 and now we are 90, so our economy is not doing well. Absolutely, that is not true. Absolutely, that is wrong. So economy, there is no connection between economy and the currency rate exchange, because to tell you, the main important driver in which the currency exchange changes or gets what should be the direction and the movement. It depends upon the inflation between two countries. For example, US and India, right? So US inflation is around 0.7, like 2 years if I compare, and Indian inflation is coming will be in the range bound between 4 to 6%. So you see that inflation of India is much more than US, and the valuation. That's why the erosion of the Indian rupee value will be much more compared to US. Now, again, US is a developed nation, so their by definition of developed nation, their inflation will be low and their interest rate will be low. So their interest rate is around 1 to 2% range, right? Our interest rate is around 6% range, 5 to 6%, 7% range. Now, whatever, right? So developing nation interest rate will be slightly higher. Inflation will be higher, and the risk premium will be higher, and that's how the interest rate is higher. Similarly, the US, which is a developed nation, their inflation will be low, interest cycle will be low, right? That's the economy. That's the core economy. There's no difference between. I mean, that what drives the valuation of any currency. Obviously, there are other drivers which I will discuss, but this is the major interest rate band or cycle and the inflation rate of inflation between two countries, which actually drives what the exchange rate will be. Now, so answering that confusion that is going down, that means our economy is not doing well. It's absolutely wrong. So if you see when we will become a developed nation in 2050, you will see that our exchange rate will be around 130 to 140 rupees per dollar. That's where it will get stable, right? That's the economy, the core crux of the economy. Now, uh, coming to another example, I will give you, like the currency exchange rate between Indian rupee and Japanese yen is 1 rupee equals to 1.47 yen. Does that mean that The yen is Japanese economy is almost 50% worse than our economy. No. Take another example, right? Um, UK and UK and US. So UK's exchange rate. Say I don't have the number. If I have probably the exchange rate, I have to just look in the Google, like what is the current exchange rate. Okay, one British pound is 1.25 to 1.28 US dollar. So British pound is much more than US dollar. Does that mean that UK is much more superior in terms of economy compared to US? So that exchange rate doesn't matter. Exchange rate only signifies the status quo between the market dynamics, and also the market dynamics is driven by the monetary dynamics, and which is obviously the fundamental of any kind of economy, right? So what has happened? I will try to explain what has happened, why it has happened. So we know that what has happened, that from $84 or 84 84 rupees per dollar, it came down almost to $90. So it's almost 7 to 8% of devaluation in 1 year, which is obviously quite high. Generally, as a thumb rule, RBI or the government always will believe that rupee devaluates by 1 rupee per year. So next year we'll expect, okay, 91. That's the healthy rate of descent. But descending by 5 6 rupees per dollar in a year will be a problem for us, because it will impact the import, right? I'm coming one by one. So what are the reason? So in generally, what has happened, right? Uh, so US dollar has increased in valuation compared to all other currency, like all currency. It's not just only India, Indian currency, rupee, but all other currency in the world. Because whenever there are conflicts in the world, post COVID, then the conflict in Ukraine, Russia, and all the conflicts we are seeing over the last 5 years, people will always go buy stable currency, which is obviously US dollar. So whenever there is a war, there is a conflict, people will try to buy two things. One is gold and one is US dollars. And when they buy US dollars, every country is buying US dollar and gold. Central bank is buying gold and US dollar. Then the US dollar value will increase, and that's how the devaluation with rupee will happen, or has happened. But not that to that significant, right? There are other effect also coming to one by. So one is obviously the standard spending of US dollar globally. So that's one reason number one. Then interest rate gap, capital flow effect, or the negative differential bond effect we call it in financial terms. What happens is that there is a bond market in US, there is a bond market in India, right? Now, what has happened, right? Mm, mm, when there was a degrowth happening post COVID and this entire conflict, everyone is trying to reduce the interest rate. Fed, central government, the central bank of there is Fed. Our central bank is RBI. They're reducing rate of interest. They're reducing the rate of interest so to kind of give a growth momentum, right? Because the inflation is more or less under control. Now, while doing so, the rate of interest reduction in India is far larger in last 4 quarters than US. And last this meeting, the last policy meeting Fed had, they actually kept the interest rate constant, right? They have not like reduced it. So what has happened, right? There is a negative differentiation of bond market. So people will find that, okay, I will pull some money from Indian market and put it in US market, because their bond yield is slightly higher. Speculative bond yield is higher compared to Indian bond market, and that is because of interest rate. Because we have to reduce the interest rate, because we saw that our inflation is under control, quite under control, and our growth has slightly tapered down because of this entire conflict, right? Supply shock. So uh, our our central bank RBI has decided to reduce the interest rate cycle. I mean, each cycle, and that's how that bond parity has actually, there's a negative bond interest parity, and that actually driven some of the investor from pulling out from Indian bond market to US bond market. And that's the reason why whenever somebody pulls out, they will obviously buy dollar and sell rupee, right? Whenever if someone buy dollars, sell rupee, the valuation of rupee, there will be a depreciation of rupee, right? So that's the reason number two. Reason number three is obviously trade deficit. Obviously, India is going through a trade deficit, and because there is a speculation in the market that India will sign the trade deal with US, and there's a 50% tariff being attributed with around 300 odd commodities. Now, what has happened that after this 50% tariff, the trade deficit has increased further because the export has reduced because of those, right? Until and unless we US reduce that trade barrier or we find an alternative market, right? So that has also kind of unsettle the investor, and some investors are actually, I mean, because if the export falls, the demand of rupee also falls, and that's how the depreciation happens. So that's the effect number third reason why that entire thing is happening. And so Reason number four I discussed, because India will obviously keep a slightly uh, a slow rate of descent, right? The 1 rupee per year descent, say 91 in 2026, 92 in 2027, 93, and so on, right? If it goes 2025 or 2050, when we are developed nation, you will see that our rupee, like $1 equals to 130 rupees, right? That's the rate what we want to be able to stabilize in that. So that's another reason why the currency is going down. The fifth reason why the currency is going down is RBI has not uh, uh, kind of intervened for a significant amount of time. They passed what they generally do is that get some of the dollar from Forex reserve, our Indian Forex reserve, and that's still in the open market, and increase the demand of the rupee, right, artificially to stabilize the price. So they have not intervened. Instead, they have taken a very contrasting step, and that's one of the reason I'm doing the video, right? While I explain that, right? So they have actually allowed that constant descent until and unless the entire community, right, of investors, different investors actually sent a red signal, and government also thought there's a right time to intervene, but not in terms of selling the forex, but doing a different thing that I will discuss. Now, falling rupee is always not bad. Falling in a healthy manner is good, right? Because if rupee falls, your export improves, export value increases. If rupee value, I mean, if rupee value increases, the import is getting export gets impacted, import is benefited, right? So either way, you have a problem. So better way is to either have a more controlled descent or have a band, right? India is right now having a more controlled descent. I'm saying that one rupee per year is the control, uh, more appropriate control descent of rupee versus dollar. Uh, so now what RBI has done, but what has what has created this problem? So twofold problem. One is obviously there's a speculative problem. Investors is losing the sentiment is getting impacted, and all the domestic investor and foreign investor are putting the money outside, right? They're withdrawing the money and taking away from India, and that is also is a chain reaction that also impact the currency. That's reason number one. Reason number two, there's a lot of problem with the hedge funds, because no hedge funds or no the people who does all those hedging has actually speculated last 6 months back, because these futures are actually sold 3 months 6 months cycle, right? There are a lot of futures uh, that many companies and hedge funds sell, and the position that most of the company and hedge funds taken mostly being impacted, because nobody has speculated that it will go in that direction, right? So most of the hedge funds are got impacted, and if hedge fund gets impacted, the reinsurance company also impacted, because most of the insurance for those fund and all the operating things are being done in the through reinsurance. So the reinsurance companies, they're getting impacted, and reinsurance company and the the core money market are the base of any economy, right? So that's how the second problem. The most important problem, because this is the problem which actually triggered RBI to uh, uh, move in that direction that so aggressively, is uh, whenever whenever dollar is when rupee is falling, right, 90 rupees per dollar, what the banks are doing or the dealers are doing, they are trying to sell rupee and stock dollar. Like they want to sell rupee. They know that the rupee is falling. The dollar is the more stable currency. What they will do is they will sell rupee again and they will buy dollar. And what does that mean? So if you see per day, it was almost almost quarter a trillion of rupee being sold, and that has created for last from December first week, that has created lot of liquidity problem in the market. So whenever there's a liquidity problem, then bank will be unable to give loans. The operating cost will increase. The cost of borrowing will increase for the banks. There will be a lot of NPA within the bank. So it's a problem in the economy. So then only RBI has actually intervened. Right? What they have done is slightly very interesting thing. Nobody has done this before. Any bank, they have done currency swap. Many bank has done currency swap, but not with OCO combined, right? I will tell you. Now, now, what was the intervention? Generally, what we have seen over the years that, and that's a strategy for most of the central banks, that whenever there is a instability in their currency, for example, Indian currency, it is spiraling down towards 90 or beyond 91. Now, generally, we'll assume that RBI will sell US dollar from the foreign exchange reserve, and it will stabilize the rupee, right? So demand of when they sell US dollar and buy rupee, the demand of rupee increases, and hence the stabilization happens there. That's a general strategy, and hence our forex reserve will go down. But in this situation, the way they have done is slightly innovative, right? They have used forex swap, foreign currency swap. So so that news is coming. If we see that news, that there's a paradox that has happened, that though RBI has sold US dollars, but still the forex reserve has gone by 12, or gone increased by 12 billion in last 2 weeks. So that's a paradox. How it can be possible? Because we are selling India is selling US dollars, still the foreign reserve is going up. The reason I will tell you why, because the intervention this time the RBI has done is because they have to not only stabilize US dollar, but they have to also improve the liquidity of our money market and also the banking system, which was impacted. So the best way to do is that repurchase of. So what RBI has done, they have asked all the Indian banks, both private and public bank, like State Bank of India, ICICI, and those banks are holding a lot of RBI government bonds and securities, the sovereign bonds and securities. So what RBI has told, that I want to repurchase those sovereign bonds and sovereign securities, and I will give you money, Indian rupees. So I will repurchase that, but I will physically give you Indian rupees, but I will be contracting you in US dollar terms. So they are not selling any US dollar, as it was evident, as it was virtually like being reported. So they are putting a contract, which is a swap contract, currency swap contract, just like an interest swap contract. There's a currency swap contract. So that contract has to be signed by the banks and the RBI, or the dealers and the RBI, that I will be selling you the rupee now. In exchange, that I will again now I'm repurchasing the sovereign bond. So I'm writing the RBI is doing a contract in such a way that I am providing you the INR now. But once the contract is period is down or expired, then I will again uh, sell those uh, uh, sell those sovereign bonds to you. So it's a contract, like swap contract. So what in essence it is happening? It is temporarily it is increasing the value, or the increasing the demand of the rupees, because they are infusing more rupees by selling dollar, virtually selling dollar, the selling contract, like future contracts, it is selling a swap contracts, right? So in that case, you can say that US dollar is getting sold in terms of contract, and we are buying Indian rupees, and that rupees is being infused into the Indian market. So my liquidity is managed, as well as my valuation or the stabilization of the Indian rupee is being managed, both in the same trade, right? I'm putting one. I'm just killing uh, two birds with one arrow, right? Do two problems with one solution. So they are doing in tranches. So maybe in January first week, then January second week, those are getting expired, and when that gets stabilized, they will again sell those uh, sell those bonds to them, security bonds to them. So, so in essence, what you are saying that those contracts, whatever contracts they're buying from the banks for those repurchasing contract using the US dollar, those US dollars contracts are getting added in as a asset in the foreign exchange reserve. Just like you have a cash, say 1,000 rupees cash, suddenly you buy another 1,000 rupees FD fixed deposit. So now you have total liquidity of 2,000 rupees, 1,000 pure cash and 1,000 FD fixed deposit. Similar line that you have US dollar as a foreign exchange reserve, and you are buying those US dollar contracts, and you are adding as a total foreign exchange reserve. So those 12 billion increase of US foreign reserve is not actually hard US dollar, right? It is a contract. It's a pure play contract. So this is a win-win situation for both RBI and the banks. So banks are getting liquidity, and also RBI is able to manage the liquidity and also manage the stabilize the rupee. So this is the overall story of the this entire currency swap that has happened. Now I have to discuss on a more bigger problem, right? Why this has happened? It is not just in a day and suddenly because of this trade negotiation got cancelled or not it failed, stalled, or whatever you can call it, and we mess, right? It's not like that. This is more of a systematic attack by US and some of their deep state. To be honest with you, there are many deep state I know because this has been analyzed by me in the ON70 form. Uh, uh, I cannot give the shell company names of those company because I don't know the liability I will have by naming those companies. But what was happening was that there is a circular currency economy that has been developed by those deep state in US. They are having some dealers in India, and those dealers are actually serving as a proxy for those circular economy. It is called currency circular economy, and they are randomly selling Indian rupee uh, without hedging, and they're buying dollar with hedging, right? So they are getting a double kind of benefit from that. So this kind of speculative and non-compliance kind of business runs through shell company, and RBI, probably RBI understand this. Now this is one side of the problem. This kind of circular economy of currency. The second problem was some of the bond manipulation, right? Bond market manipulation, right? Whenever I can because Indian bond market and US bond market is quite linked because the interest rate trajectory is quite linked. The intervention between two banks are quietly followed, and hence the bond market becomes, and US bond market is huge, huge. It's almost Indian bond market is negligible compared to US bond market, and very slightest manipulation in interest rate or slightest manipulation in the yield of bond market, and sometimes more often US does that. They have a very complex they have a complex system of maintaining those and they can manipulate those artificial yield also. Some significant on the gray market bond they bring whenever they need, and they sold whenever they think that purpose is solved. So those kind of manipulation of Indian bond market via their huge large bond market, which actually is driven by deep state. Also, there are a lot of deep state. I will not name those companies, but I guess RBI also know. I mean, they understand all those things, and that has to be shielded. There are different norms Indian government and as well as RBI is trying to bring, and most of them has been targeted towards SEBI, security exchange, which is more of a equity based. but there are a lot of things has to happen in the bond market, because this entire crisis was artificially slightly being amplified using the bond market, right? The gray bond market of US, which is run mostly by the deep state. BlackRock is one such company which does a lot of black market bond segmentation and also hedging of those, and obviously those kind of things are being done systematically. Third is that fake news, right? Like the understand that Adani was one of the victim. Like you just create a narrative with some documentation. Like Heisenberg was one such instance where they did that, and there was a lot of problem with the equities, capital markets. Now, capital market is also closely linked with the debt market, bond market, right? All this market is quite linked. Now, when you are impacting bond capital markets, there will be impact in the bond market too, and hence there will be an impact of the yield, interest rate crisis, liquidity crisis, and everything adds to that demand and supply, which I talked about on the short term, right? The currency demand and supply. So if I have to tell like what is the percentage of systematic uh, attack from deep state from US, uh, I will say it's a 50-50. 50-50 is a problem within India, like the situation based on which the trade deal didn't uh, go through, and also there are other speculative things and also norms and all those things. So I will call a 50%. 50% is a problem of the systematic attack from US, not US as a government per se, but US deep state, like these fund houses, deep state, deep pocketed fund houses. BlackRock is one of them. There are a lot of circular economy being done both at the dealer level, proxy dealer level, as well as the bond level, bond market level. So these are some of the challenges RBI is facing, and probably RBI is a very good institute. They understand these things much better. It will take certain norms and certain regulation to be brought in that will actually address those kind of things, right? So, so this is how I thought of kind of sharing this information. Thanks for watching. Good night.